After carefully examining the stock, I do believe that Rivian may need to raise money again, but wow, what a fantastic brand and business it is. Now, Ross, as we approach the end of the year, how do you envision Tesla's relationship with the economy as a whole? We seem to be seeing some encouraging signals, but Tesla appears to be vulnerable given that we recently had a period of price reductions. How much worse can it go before they start lowering prices once more? How do you see that connection going forward? I mean, the lack of customer knowledge and understanding of the value proposition of the Model Y today is just astounding. So if they cut prices again, I'm just going to, freak out. Furthermore, it is a grave mistake for Tesla to not be aggressively pursuing new customers through more advertising. Some, but not much. Compared to spending $20 or $30 million on a media education campaign to inform people about EVs, it has caused a great deal of needless suffering. Any young person who doesn't possess an electric vehicle will give you absurd explanations for why they don't. Tesla's shares reached an all-time high of $299.129 on November 4, 2021. Even while it was a really fascinating development for Tesla, we discovered that the company's stock price has never been able to reach that level again. After experiencing some ups and downs, investors are beginning to wonder when Tesla stock will hit all-time highs once more. As we delve deeper into the tale of Tesla's stock price, we are presented with a choice. Every stock investor is aware of how volatile the stock market can be and how many different things affect it. A large number of investors pull out during these volatile months. There are very few equities in the financial world that attract investors' attention as much as Tesla. However, despite this, a number of outside variables continue to affect Tesla's stock, which has prevented it from rising higher on the chart. We'll talk about a few potential explanations in this video for why Tesla's stock hasn't yet returned to its all-time high. We'll also learn about the peculiar factors that have shaped Tesla's trajectory and the intricacies of the stock market. Come along as we explore the reasons behind Tesla's stock price's failure to reach its previous peak. Now let's get going. Welcome back to Fast Market. For our second segment, I'm Kevin Hines and Nathan Peterson is back. We are emphasizing what some may consider to be the main benefit of the UAE's overall switch from fossil fuels to electric vehicles. When we talk about Tesla, there are a lot of questions and concerns that come up. However, the most straightforward one to address at the moment is that, Nathan, it has sold off considerably over the past 10 days and is currently $8 below its day's low. How do you feel about Tesla? How do you feel about this massive EV manufacturer? Yes, that is a valid question. It's a CT stock after all. On the optimistic side, one may argue that there are a plethora of opportunities for future growth, including the upcoming Cybertruck, the charging network, and all other potential areas of revenue development. Yes, it is difficult to price, but since it is so difficult, I believe that this is good for the stock. I believe you forgot Neuralink. What is it? Is that a different project altogether? I'm a little scared of that one, but how would you price that? I believe this is the case since market estimation is challenging. How do you calculate the cost of an autonomous taxi system and the savings certain automakers stand to gain from eliminating labor and having autonomous vehicles on the road in a scenario akin to Minority Report? Well, it's challenging right now, so I suppose that kind of helps. However, the margin problem is a worry. There is a problem with competition. There, China's weakness is a cause for concern. Again, it's just one of those stocks with promise that fetches a premium, and I believe investors have generally shown a great deal of patience in waiting for it to materialize in the form of higher profits. Depending on how well the business does in terms of its financial performance, operational effectiveness, product quality, customer satisfaction, innovation capabilities, strategic vision, and competitive edge, Tesla's stock price may hit an all-time high. Additionally, it is contingent upon the way the market responds to Tesla's announcements, events, news, and expectations. Leading the way in electric cars, battery technology, and autonomous driving, Tesla is among the automotive industry's most inventive and revolutionary businesses. It is therefore worthwhile to talk about given that, despite over 2 years, the stock has not yet returned to its all-time high. Although a number of analysts have forecast that the price of Tesla's stock will soon reach $300 per share, this is still somewhat tentative. What therefore may be the cause of Tesla's stock price not reaching this record high once more? Let's investigate. But before we do, please make sure you subscribe, press the like button, and enable post alerts if you enjoy this kind of content so you can stay updated on all things Tesla. The automaker's decision to lower the prices of its Model 3 and Y vehicles in some of its markets, the Federal Reserve's decision to raise interest rates, and the growing competition from automakers increasing their offerings of electric vehicles are some of the reasons why Tesla's stock price is still below its all-time high. Ford, GM, Volkswagen, Toyota, Hyundai, and other automakers are just a few of the manufacturers that Tesla is facing fierce competition from. These businesses have introduced new models, or they intend to, that may pose a threat to Tesla's pricing power and market dominance. This raises the question of whether Tesla's stock price will ever hit its all-time high once more. Given the nature of the stock market, it can be difficult to make definite predictions about how stock prices will change. Many factors will continue to affect Tesla's stock price, and a number of criteria will determine how close the company gets to hitting an all-time high. What is certain, though, is that investors should not lose hope in Tesla's long-term prospects and growth potential in spite of all these obstacles. With a number of competitive advantages, Tesla may be able to hold onto its top spot in the electric vehicle industry. Investors, for instance, pay close attention to Tesla's quarterly and annual earnings reports, and the company's stock price can rise in response to great financial performance. In a similar vein, Tesla's achievements in the fields of renewable energy and electric vehicles are directly responsible for its success. A company's stock price may rise as a result of introducing new goods, developing new technologies, or entering new markets. Tesla stands to gain a lot from the expanding EV market as the world's automotive industry continues to migrate toward electric vehicles. This might raise demand for Tesla products and even raise the company's stock price. Furthermore, government laws, subsidies, and policies pertaining to renewable energy and electric cars have the potential to have a big influence on Tesla's success. Inflation, interest rates, and geopolitical developments are examples of economic variables that might affect investor mood and the whole stock market, which includes Tesla. Traditional automakers are joining the electric vehicle industry, increasing competition. Investors must see that Tesla is maintaining its market share and competitive advantage in order for it to continue to outperform all other companies. In actuality, short-term price swings are influenced by speculative trading, media publicity, and investor perception. The way institutional investors, like hedge funds and mutual funds, behave can have a big impact on stock prices. Thus, for Tesla's stock price to once again hit all-time highs, it will be essential that it meets production targets, grows its product range, and efficiently manages its supply chain. Any executional problems may have an impact on stock performance. It's crucial to remember that a variety of factors affect stock prices, making accurate stock market predictions difficult. To comprehend fluctuations in stock prices, analysts frequently rely on a detailed analysis of a company's fundamentals, industry trends, and overall economic conditions. As an investor in Tesla, you should be ready for this volatility and understand that short-term swings don't always indicate the company's long-term prospects. Given that Tesla's stock price is notoriously erratic and volatile, it is challenging to predict with confidence how it will move in the future. However, one thing is certain: investors, analysts, the media, and customers will all continue to be very interested in and aware of Tesla's stock price. Thus, it's preferable to maintain concentration and focus on the long-term objective. How do you feel? Please share your thoughts in the space below, and don't forget to subscribe and like. If you want to learn more about what Tesla has been up over these past few days, you should also watch the next film that plays on your screen. There, we'll see you.